Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the Forex. Today, guys, I think that makes sense to take a look at something else. Personally, I've chosen Great British Pound for today's daily video, just because, well, actually, you could see the upside performance across the board, so not only on the cable, but you could see on euro currency, gold, stock market. So the market's just getting some technical relief, just because market hour extended. Investors were too nervous in the recent week. It was a lot of events have happened, Fed statement, a lot of statistics, so, and some psychological tightness appeared in the minds of the investors, so everybody needs to take some rest. This market's not an exclusion. So, and we could see the bounce. Of course, this is not the sign of the changing fundamental background. The situation in the United Kingdom, as you know, stands really difficult, based on recent statistics with inflation, employment, and so on. So that's why we're standing now a long-term bearish trading plan on the cable, but still, in the shorter term, we could get some technical bounces. This is normal, as usual, it happens. So currently, the technical reason, except what I said about the psychological situation, it stands around the oversold on the weekly chart. So we could see on the weekly market hits the oversold, although the major levels have been broken already, but still oversold could support market for some time, triggering some pullback here, which actually we could see right now. As a result of this, on the daily chart, we've got bullish reversal candle here. As you can see, market creates the new low, washing rings, some kind of the, and close above the top of the previous session. This is bullish reversal session, which is very good for starting upward action. Trend turns bullish on the daily and markets keep going higher. So we suggest that maybe if we get lucky, we could get compounding retracement. So it might be some kind of the ABCD action, which we try to use. At the same time, take care about this ABCD pattern, which is major not only on the daily but on the weekly chart as well. You could see obvious acceleration on the CD leg to the downside, which, well, makes mostly unavoidable that price should hit the XOP. It's around 120. Actually, we said it's our target 120 even 2-3 weeks ago, and market mostly stands right there. So it means that with this bounce, we not think that will be some sharp reversal and upward trend will start. But after the pullback, it's really big chances, and we probably suggest that's really should happen. Market hits the 120 support. It means that this reversal you might use, or pullback you might use not only on the direct upside trading on the intraday charts, but also bears could control some resistance levels, targets of these patterns that we will discuss a bit later, and search for them, trying to take the short position with a possible target around XOP. Finally, on the daily chart, important thing that we have is, of course, daily overbought. Daily overbought stands 24.20 approximately, which is very good because market coming to the resistance, and that might be the potential setup for bears if you trade on the intraday chart. So it stands right 20 to 24.20. On the 4-hour time frame chart, one of the patterns that makes sense to consider is, of course, head and shoulders. Actually, we have here two patterns. First pattern is the free drive, because if you calculate the extensions of these retracements, you will see that it's perfectly stands at 1618. So second stands 1618 for the first, third stands 1618 of the second. This is also some type of the free drive pattern, which is called 1618 free drive. And minimum target of this pattern is the top between the second and third drive, and you can see market mostly has completed it. Right above this area, we have the 2450, 2490 confluence resistance, and it agrees with the daily overbought and potential neckline that we have here. So maybe I'm not exclude the chance that maybe the neckline will be slightly skewed to the upside, which would be, well, good situations, just because here we also could get the bullish reversal swing to the upside. Then next step is a common step, as we're usually dealing with the head and shoulders. We are waiting for the bottom of the right arm, right here, and that will be the moment for decision making. Existence of the daily overbought here, it is a big assistance to us. It's just because it eliminates risk that market could show the straightforward upward acceleration. With the daily overbought right there, there's a really big chances stands in favor that still the head and shoulders will be formed. Diversions here as well, as you can see. So that's what about the strategy for short-term trading. Now about the tactics. If you'll take a look at the hourly chart, you could see approximately the pattern that we could get. So entry point supposedly might be around 123 area. Here market has the ABCD to the upside with the XOP 2446. This XOP creates the perfect agreement with the confidence resistance and agrees with the daily overbought. So if you have the bearish view, or at least you would like to make the scalp short trade, that's the area that you could keep an eye on. So you in general could try to take the position earlier, because when the market is coming to the overbought, it becomes a bit unstable. So it might be some spikes here, something of that sort. And sometimes market not reaching the precise target. This also could be. But if you would like to take the position a bit earlier than XOP, your stop placement has to be counted on potential reaching of this area. Just you not to be the washed out occasionally when the market indeed hits the XOP target. So it would be better, if you plan to take the short position with downward action, is to place stop somewhere above this area, above the daily overbought, and maybe initially preferably above the confidence. That's just will be very safe solution, which actually mostly excludes the occasional triggering of your stop order. That's what about the bearish positions. The target will be here if, of course, head and shoulders will not fail. In the current environment, as you understand, we also can't exclude this chance. That's why potentially, if you're taking short position here, you're getting at least the pullback here with the right arm, but potentially some chance exists that if head and shoulders fails, you will get straightforward downward action to the 120. So this is advantages of the possible taking the short position here. For bullish trade, actually currently I think that it makes no sense trying to jump in running train. It's because we stand very close to the XOP already, and it would be better to be focused on the potential pattern. So just watching for right arm around 123 and then make the decision on possibly taking the long position. So that's what we have on the cable. I just think that situation here is a bit more interesting than on euro currency, where we have the bullish action, but it's a bit choppy. And actually, we already discussed the patterns that have been formed there and the targets. All the stuff stand in our weekly report, so nothing has changed. So you could just refresh this in your mind and make the decision. So, but on the cable, as you can see, well, overall stuff with the pattern stands really interesting.